Hi. All right. So I promised a friend that I would do a video on how I sometimes prepare for the day and some of the things that I look out for and sort of the analysis that I do. Um, at least it's what I learned this from some of it taken from Al and some of it just looking at the market. Um, at least and I noticed that just based on a lot of what a lot of sort of futures traders how they're trading. I've realized that actually this is kind of how to actually kind of do things. And I'm recording this video only just because I think there is a lot of maybe fluff out there that is posted to kind of make people think or make traders think that, oh, this is the strategy or the secret method. I don't think there's any secret method. And anyone who preaches a secret method is only lying to you because the market is just really a place where people actually just come and take trades, but in both directions, both bulls and bears are making money in both directions. So you can make money in any direction as long as the market gives you an opportunity to do so. But anyway, that's a topic for another day. All right. So whenever I start the day, I usually like to start with the higher time frame, weekly, monthly. I mean, we could start with the monthly now, just to kind of get a sense of what we see is happening. Um, so on the monthly chart, what do we have? We have a bull trend here, right? And then now we have a pullback, and we seem to sort of transitioning into this trading range. I mean, there is a trading range here, but in this trend here, the price, as you can see, is beginning to go sideways. We have a push up here, and then an attempt for a second push. Every leg, I always say this, every push or every move has two legs. So we've done one pullback and we're forming the second one. Right? We have this bear trend line over here, and it's more visible on the weekly. Okay. Well, anyway, sorry. The month hasn't even come to an end, has it? No, we're still in January, so the monthly isn't really relevant. The weekly is very relevant actually because um, we're starting the week today, stroke tomorrow, um, and last week's close is very important to um, how uh, the next week is. It increases the chances that we're going to go higher. Let me use a better chart because of all these lines, and I don't want to confuse things. So I'm going to use a different chart. Here we go. All right. It's a good thing I have this indicator here. All right. So let's go back to the weekly. And as I was saying, last week closed on its high as a bull bar, and that increases the chance that will go higher. And what's even so good about this is the fact that it closed on its high strongly above the moving average. I'm going to clean everything that's off this chart. Yeah, it closed on its high. Sorry, closed on its high and strongly above the moving average. It also looks like this is the start of a second leg move of this move. And if I draw that trend line from the top here down to here, we cracked it here, at least on this chart. This is a pullback, and chances are we're probably still going to try and test it, if anything, close above it, but we close just on it right now, at least on this chart. All right, so let's go on to the daily. So I know that this week we'll probably have, sorry, just before I go into the daily, we have three pushes up. There is a chance we may get a bear bar over here because we're a bit extended, um, but that might just be a pullback because it's a big bar. It might just be a pullback, just like we have over here. Okay, so let's go to the daily chart. I'll start off with the RTH daily. I'm sorry, ETH daily. Um, oh, another thing to point out is we have a reverse head and shoulders, a head and shoulders bottom. So shoulder, head, shoulder. So there's a chance now that we are going to try and test this high. If we test this high, this is the wait, hang on, shit. Yeah, so this is the neckline of this head and shoulders. So we need to test this high and try and get above it, and possibly above this. So there's a target of this high right now. This high is the first target. This is the December high, so we want to get above that. So where are we now? So we went into a trading range over here. We broke out. We pull back. You could argue this is the first leg, right? First push, pull back. Second push, we haven't gotten a pullback yet. We have 1, 2, 3 pushes up here. So you could argue a wedge top over here or a micro wedge top. So maybe we might get a bear bar or a bear day tomorrow. Tomorrow is a holiday, so it'll be interesting to see what kind of bar we print for that day. But this is the obviously on this chart. On the RTH, so I'm gonna post the RTH now. Oh, there we go. We have a lot of bull bars, and again, similar story. We have trading range here, a breakout above the 20 bar expansion moving average, a test on the moving average here, actually 4 consecutive bull bars. So this is a very, very strong indication that we may go higher. Yeah, but one thing though is we have a bit of a trading range price action over here. So we have 3 overlapping bars, and that gives me the impression that we're probably not going to go very much higher. So that's what the first thing I'll look at. So if we are trading as a trading range on tomorrow, I'm going to be interested to see what happens in the overnight session. And so if I go, say, to the 4-hour chart, and I'm going to use the ETH chart. No, this is not. Let's use a different. Let's go back to this one I was trying to run away from. There we go. So on the 4-hour, I want to see. Right now we have this breakout, pullback. So it's first push up, pullback, second push, pullback. We're going 2 legs this way. There's a chance we could go for one final push, or we could go sideways to down. We tested this already, so there's a chance we could go higher for one more leg up or one more push up. So that's what I'm looking at, i.e., what are we going to do on the highs over here? We know that there's sellers around this area because they've done this. So I would look to sell the highs unless we have a very strong pattern that shows that there is a lot more up to come, i.e. a breakout on the 5-minute chart. So I would look for that at the open. Otherwise, if I'm not seeing that price action, this is not a gap up. Depends again on where we go. If we have a gap down, say for instance now we get a bear bar that closes here, I want to see what the test of the moving average will be. Are we going to gap down and make a wedge bottom or a wedge top and go straight up, in which case we're going higher? Are we going to gap down, test the moving average and head lower to test these lows, because we are still in a bull channel but in a broad bull channel. Now another thing I always do is I like to see the distance between price and the moving average, especially on the 1-hour chart, because when we're so extended from the 1-hour time frame on the when price is extended from the moving average, we tend to rotate at certain levels. So this is the price oscillator, and the price oscillator is essentially just measuring the distance between price and the moving average. So the price oscillator is what I use to check how far extended we are with price. So when this is the 1-hour RTH chart, so whenever we are about 2.5%, 2.6, 2.5% away from the mean, i.e. from the moving average, we tend to rotate back to the moving average, sometimes finding support like we have over here, or resistance, and sometimes we're just oscillating around it just like that. And then when we're extended, as you can see, we're close to my red line over here. We rotate back to the moving average, and then we start a new leg up. Obviously, when we're bouncing off the moving average, we're on a bull trend, which is literally what you kind of expect. We're on a bull trend, so we're probably going higher. So I'm kind of combining all these things, just trying to get a good sentiment of what's happening. Right now, the volatility is reduced a lot, so I think this is really the mean, right? I mean, obviously in the trading range, this is the mean, And what I mean by the mean, sorry, the average in the trading range right now, 0.9% um, distance, 0.9% from the moving average seems to be the level that we're going sideways on. When we're trending earlier in the year, during the big collapse, um, you can see that every time we reach this level, we rotate to the other side, we rotate to the other side, back and forth. And the reason why this is useful is because, say, for instance, you're in this part of the cycle, you know that you're not at the top, so chances are probably going to go higher. But more so when you're, let's say, around here, the price action becomes more two-sided, and we start to go into the what we call the narrow state. So we're going from narrow to wide to narrow. So we're going far back to the MA and then far back. And price always does that, where it kind of goes from narrow to wide, back to narrow, to wide, back to narrow, to wide, back to narrow. And that follows this thing. So if we look at where we are right now, we're kind of still very much in the center. And since we're in a bull trend, at least that's the way I see it, bouncing off the moving average, um, this is another bounce from Friday. We should, but we're kind of between this level extension and this level here. So I think there's a chance we could either go down, right, which means we break through, maybe unlikely, or we could go up, break out. Um, right now on the 1 hour, this looks like a breakout, a pullback, and a trend up, right? However, it's incidental. We closed on this level here because we're going sideways. So if we are going to go higher, I think we need to come back and test the moving average. If we test the moving average and we hold the moving average, I think we should have a nice leg up. So in that sense, I'm looking for maybe a wedge to the moving average, this moving average here, and a bounce. Otherwise, it will be a double top, and we go below the moving average, and we get back to these lows. So those are the two different scenarios I'm looking at: whether we're coming down to test it and bounce, or we come all the way down and then test these lows, and then carry on the trend, the trading range, just like we did over here. The thing though I'm noticing is this trading range here is rather small compared to sort of the normal trading ranges you get, where the price is oscillating with how many points now. Um, oh gosh, I can't find the panel. I used to have this floating panel. Oh, there it is. All right, so the previous trading range, at least from the highest high to the low, was about almost 120 points. This time when the trading range was about here, kind of like a bit of a channel, it was about 73 points. What we have here is in the 50s. So yeah, it's just between 50 and 60. So it's not a huge range. It's a very tight range, and that almost makes me think that this is a flag, um, like a sort of continuation, a flag for a continuation pattern. But again, the price will tell us what's going to happen. So during the market open, sorry, just before the market opens, I'm also very interested, like I said, to see how we traded the overnight session. So if we look at the ETH, the electronic trading hours, I'm going to put this to differentiate. I want to see how we traded here. So if I notice we have a very strong high, a very strong low here, i.e. we've come down so strongly and we've moved up so strongly. So this is a trading range here. I want to see what is going on. And in this case, we had two legs down. This was why I bought aggressively over here, because we're probably coming to test these highs. Prior days, as you can see, strong bull, well, not really such a strong bull trend. You have two legs, big down, and then a breakout above. But look, see what you have in the overnight. Sideways, very narrow sideways. No intention to come back down here, not even to test 50%. So this is an indication that we're probably going higher, because this is a bull flag. A test of the breakout of bull flag, and then a continuation of the trend. So in this situation here, what one needs to do is remember this is such a small tight consolidation, and not what has been going on over here. We didn't pull back down and go sideways. Actually, we just held this level. So it looks like there is an interest by the bulls to take this level as value to go higher. Here, what's happening here? We have a bear trend, and then we have a wedge, a top, a pullback, and then continuation of this wedge. This wedge itself is you're seeing some two-sided trading. This looks like exhaustion, and you have a very strong up, a nice pullback, right? And a second leg up, final pullback, and third leg up. So this is a wedge. It'll be interesting to see how far down this goes. And what actually happens is you actually just get this far to this breakout point over here. You don't actually break this low. So chances are, if we go up, we're probably going to break this high. Now, what does that mean? Look at how the probabilities are increased when you have a very big breakout like this, up to 50% or possibly even more. A very small pullback, and then a big second leg up. Here, the after hours again, nice wedge top, but instead of going down, it looks like we're going up. So this is a buy climax continuation here. So 1, 2, 3, and possibly 4, and then a measured move down. This is actually really cool because here you have, I mean, this was when we were in the trading range, so it makes sense. So we hit double bottom, so chances are we're going up based on that double bottom. I think this was on some sort of report, CPI or something. So the after hours, how we trade it is really important. Another thing is when we're trending on the daily chart, if we're trending on the daily chart, the market will probably keep trending on the 5 minute as well. So when you see the price, the bars are on top of each other like this, you want to keep buying. When the bars are beginning to express themselves as dojis and they're overlapping, you want to do your buy low, sell high scalp. Here we sort of gap down, pull back, another down, and then we're overlapping again. So another trading range over here. We gap up, break out of this range. There's probably a measured move on here. So we carry on more trading range price action. And that helps a lot. Seeing what's happening here, whether it's a range or whether it's a trend. Here it's clearly a trend. The bars are usually smaller in trends, I've noticed. Trading ranges, the bars tend to be... Actually, no, I don't think that's true. I mean, on the 5 minute chart, yes, that happens sometimes. But I think it's worth sort of checking to see. I think on trends, you tend to have smaller bars because, there's buying and selling. But when we're in trading ranges, we tend to have big bars. Yeah, I think that's true. But one could argue, well, how about here? This is a breakout, trading range, breakout, trading range, breakout. Yeah, the bars tend to be smaller. Anyway, that's how I prepare for the day. So when it comes onto the actual day itself, I'm now looking at especially here on this day, because of the fact that we've been trading sideways. I was interested in buying the lows, and I wanted to target the highs. I ended up getting out halfway, but I should have actually made the effort to get out the highs. That's something I'm going to work on. All right, I hope this helps, and some feedback would be great. Thank you.